Hey, this is Jim at 7:59 a.m. in San Francisco, California on March the 27th. Please note that all discussions, analysis, and information presented are for general informational and educational purposes only and should not be construed as financial or any other form of professional advice. So I'm going to do a fairly long video, but I'll dive right into the 5-minute chart. In case you don't have time to watch the whole video. If you do want to stick around, I'm going to cover what I think looks like an important volume pattern on the 60-minute bars. And then I'm going to cover big picture on balance volume and kind of where we are with respect to how that was playing out and what I'm expecting to see in the future here. So first off, what we're viewing here is the 5-minute bar chart for AMC. And your point of origin here to track this, what I think is the most important downtrend line right now from a trading perspective, is the December 4th, 2023 high and the December 14th high. So just shoot this downtrend line off of those two points of origin, and here's what you'll see. This is the point of origin of that $3.85 hidden retest level that we still might see. So the only reason it's relevant is if I personally wanted to add, I'd have my limit buy order down there. Otherwise, you guys know that with these hidden retest levels, there's not a timing element. So this could be revisited 2 hours from now or 2 years from now. So again, it doesn't prevent price from taking off to the upside. We want to concentrate on the Nemoy terminal daily trigger and a couple other things as far as that goes. So that's the point of origin there. You guys can see that that downtrend line that I showed you off of the 2023 bounce highs was revisited again here February 28th, and then again March 7th, and then again March 18th. Rejecting. Then we start, what I call a bear crawl, just meaning that you have a downtrend line, price breaks out above it, and then instead of, moving back down below it to trend in sort of a channel, that it sort of skips down that trend line. I call that a bear crawl in my work. Opposite would be a bull crawl, where you have an uptrend line, price breaks it, and then price starts to move up that uptrend line. So here's what's important about this. The entire move, during this entire move down, we've never had a situation where a price moved up, pulled back, and broke out above a previous high. Like right there, did not happen. Right here, did not happen. Right here, did not happen. So we have a situation here where if price can move up through this Anemoi daily trigger at $4.36, it would also be the first time in this entire long sequence here of price action against this downtrend line, where the stock could move up and arguably break out of the downtrend or a basing pattern in this case. So that's why it's a big deal. Here's that 385 hidden retest level, still on the table. Timing element on that intraday looks something like this, if it were to happen. And then you can see this box here. I'm not going to give you the exact timestamps, but then we start to move into a period where if the stock tracks the zones of strength, plural, and again, we've got 5 different spring algorithms underneath the market, buying on pullbacks against 3 wet blanket sell algorithms selling on moves up. That's what creates this very tight range of ping-ponging between the algorithms. If we can just move up and break above those wet blanket algorithms into these zones of strength, then we can take off. And again, we've got an air pocket here between $4.36 and about $10, which is where the weekly trigger is sitting with the Nemoy. So that's what that looks like. Again, going all the way back to that December high. Here's your important downtrend. If you guys want to draw this on your own charts and track this, challenge it on February 28th, challenge it March 7th, challenge it March 18th, the 21st, and then here we are. And this is, other than right here, this is the cleanest sort of, potential breakout. We're going through vibration sequence right now. Again, 385 is not off the table, and it'll remain on the table even if we were to move to, $13 or wherever on the upside. This will be something I'll have to talk about. It's the equivalent of actually back in 2021, in one of the first two interviews I did with Randall Cornett, I talked about that I had that sort of, expanding megaphone melt-up fractal setup and a really big opportunity to the upside if price started just to move through certain trigger levels, but that I also knew that eventually the stock wanted to move back down to $3, and so I was going to have to keep my eye on that. I thought we'd move back above that 2021 high and finish out my 5-minute model topping count before we came all the way back down to $3. Instead, Adam did what he did, and the rest is history. But this is a really clean setup here. The range remains tight, but we could really take off above this 436. And the best opportunity would be later today, but especially the next 3 sessions after that. So the 28th, 29th, and then into early April. So that's what that looks like. Next, I'm going to show you the, what am I going to show you next? I'm going to show you the 60-minute volume. So these are 60-minute bars. You can see this wedging pattern here that I've defined by these yellow downtrend lines. And then again, we look at the nesting or resting volume and where the collision takes place. In this case, right here is where the collision takes place. Again, the downtrend, this downtrend where it meets that nesting or resting volume defined by that sort of horizontal white line right there. So key takeaway there is that we did see what appears to be rising volume here coming into the dates that you would expect. The other thing that's important is if you look back at during this decline right here, the volume has actually been playing out bullishly. So in other words, we had this green bar here, 5.1 million shares. We had, this was a green bar, this was a green bar, and then this decent sized red bar was just 2.33 million shares. That was early morning. That was the opening hour on the 19th of March. And then we engulfed it with this 2.34, where am I? Right here, 2.345 million share green bar. So again, that looks like a really clean sort of bottoming pattern if I weren't looking at price at all, other than to reference whether the bar closed green or red. That has a really nice bottoming look to it. And then coming out of the other side, we printed another 3 million share bar right here. So if we can just start to print above 3 million shares on a closing basis, hourly bars that are green, either later today or the next few days, that'll start to really look like a solid bottoms in place, at least for, sort of swing duration trades, if not, position. So that's what that looks like. Next, I'm going to bounce over to the on balance volume. Where am I? Sorry, you guys. Okay, so I'm gonna go all the way back and review this in case you missed the first video I did on balance volume. So this is 2020 moving into 2021. This is the price downtrend line right here. So an important downtrend line as the stock was trading into its all-time low, and then this is on balance volume uptrend. So as the stock started to lift just a little bit, on balance volume was acting healthy. You can see these contact points right here. Then on balance volume looked really ragged right there into the low. But as it turns around, it actually breaks out on January the 22nd. And the stock is still way down into this area right here. So it hadn't made a huge move yet, as on balance volume was breaking out and spiking above this uptrend line. So sort of an early tell at the time that something big could happen on the upside. Then we had the typical, one leg up, consolidation, then the most powerful leg. They always, I should say, the majority of the time they unfold on the third wave or a C wave if you're into Elliott wave theory. So this idea of just trading off of from an all-time low, straight through to an all-time high makes no sense based on anything I've ever seen, unless the all-time low is probed, for a nanosecond within a multi-month sideways trading range. But I've never seen an instance where you trade in a long, grinding, relentless series of lower lows and then turn around and move through the highs. So if we're going to see something big to the upside, I would imagine, and based on history, it should unfold in an up move, and then a multi-week, multi-month consolidation, and then another push. One of the important things I wanted to cover before I move over to the right-hand side of this chart is just to put things in perspective as far as the price moves that people are expecting at this point, just to make sure that we remain semi-sane and realistic. This first move was a 900% move. The second move was a 700% move off of this level right here. So when you think in terms of what we've already seen when we had a less diluted stock and arguably a much more explosive short covering setup as far as the statistics behind how many shares were short and the rest of that. Have to keep in mind that just to move up to $13.50, the equivalent $13.50 pre-CRS, which is $135, which is this hidden retest level I have, that's a 3,000% move. So not to say it can't happen, and especially over a 12 to 24 month period. But if we're lucky enough to see some kind of just totally explosive move where we would unfold, where price would unfold in a almost a straight line over multiple weeks and hit that level, on a percentage basis, it would be off the charts compared to what the stock's done in the past. So just, I'm personally going to keep that in mind, and hopefully everybody else will too. So back to this on balance volume. One of the things that a lot of the people in the community were talking about as far as something they thought was a really bullish sign, and I don't argue with them, is that as the stock was declining during this entire, grinding phase right here, the on balance volume was holding up the entire time. So that was supposedly proof that retail was not selling and that we were still in really good shape. And I wouldn't argue with that. I think that's probably right. Unfortunately, what happened was Judge Zern allowed the CRS to go through, and then the CRS crushed us. So the 40 million shares that were used were diluted, and then the 48 million shares of dilution that came in. You have to remember that prior to the reverse split, that would be the equivalent of 400 million shares and 480 million shares. So my little note right down here, 40 million plus 48 million equals 880 million shares pre-reverse split against, and keep in mind, against a float that was 516 million. So this idea that shorts haven't covered or haven't covered anything is just, it's just insanity. I don't know where people are getting that from. And they're probably either hedge fund plants or really naive people making analysis publicly. So here's back to this on balance volume setup. We had this long-term uptrend. We had the jump. We had this explosive move to the upside. You guys know that, trend lines that were previously resistance become support. And so that's exactly what we saw right here. So that's a really, in my mind, that was a first really kind of positive sign we saw in this whole thing. And then you see my note here that on balance volume should return to post a third contact at 550 million. All that is I'm saying if this really was a reversal point here with resistance becoming support, and we're going to see a third contact on this red line here, point of origin, downtrend line, that the third contact, if it happens any time over the next month or so, would make contact at about this 550 million mark. So it's something to keep an eye on. Now, if we were going to see some kind of a melt up or a bigger move in the stock than what I'm anticipating, what we would see is we would want to reference this bigger picture downtrend line, this thick red line. And what we'd want to see is we'd want to see on balance volume actually move above this downtrend line right here and above this major long-term downtrend line. And then this resistance becomes support and then take off to the upside. So basically, even though this green line is an uptrend line, think in terms of, this resistance becoming support and taking off to the upside. Now, it would take a lot higher readings, obviously, because at this point, you'd be posting 600 million numbers. But again, if you were to move above 600 million and then this downtrend line were to become support, then, you could really take off to the upside. So that's that. Let me show you guys the Anemoi terminal, and then I'll wrap up with one last thing. So you can see the daily triggers at $4.36 today. That will continue to move down about 3 cents a day this week. Let me remove the weekly trigger, the monthly trigger, the weekly trigger, and we'll focus again on zooming in on this current setup. This is where we are today. Been in a long about a month-long clustering pattern here and ping-ponging with the daily velocity. What we want to see here is we want to see price move above that daily trigger at 436, either, sometime this week. And we want to see, more importantly, we want to focus on the, we want to focus on the daily velocity, and we want to see a print above 3 cents. So this last high print on daily velocity was 0.028. We want to see a 0.03 print on daily velocity or greater. If we can do that, then our focus becomes this massive bullish divergence in the weekly velocity, which means that price would want to return to the weekly trigger. That's how it works. So if you have a bullish divergence in weekly velocity, it's telling you that price wants to revisit the trigger associated with that velocity time frame. So weekly velocity matches with weekly trigger. Weekly trigger sitting up at $10.22. It'll drop into the 9s next week. But we also know that we have that $13.25 hidden retest level in based on BAM. So, roughly say 9 to 13 would be the attack level. And then hopefully at that point we would consolidate, rattle around, and trade in a range between $9 and $13. That would then create a situation where weekly velocity is set up to flip to the upside, just like right now daily velocity is set to flip. And then we could finally be in a position to where we could move toward this big monthly trigger which is at $70. It'll move down into the 60s next month. I think that's it. Let me see if there's one other. One other thing I was going to show you guys. This is the view of the layout that I've been recording for the past 7 months. And so all this is the 5-minute bar chart right here on this side, and I track volume. This is the 1-minute bar chart right here, and I'm tracking volume. You can see how much they're dark pooling right now. And then this was the 60-minute chart that I showed you guys. This is the tick. And so this is how I monitor whether or not they're printing or if they're moving things into the dark pool or breaking trade size to where the trades inside the time and sales window never make their way into the tick, which means they never make their way into the 1-minute bars and up the food chain. So again, if you guys are interested, this is in tracking time and sales ever. What you have to keep in mind is anything under anything that's not a round lot, meaning anything that's less than 100 share size, right? So this is the size category right here. So this prints those that 100 shares, the 200, 300, 300. Those are all print to this tick, which means they print to the 1 minute and reflect in the volume. But all the rest of these, 37, 10, 35, 110, 30, all of those sub 100 shares, those are called odd lots. And none of those print into the tick. The reason that's important is because, again, those are trades that sort of get in the way of velocity and momentum if we start to trade to the upside. So what you see them do is anytime we start to move to the upside and threaten a breakout above a price range, and especially when it's on higher volume, what you'll see them do over here in time and sales is immediately move in, throw a bunch of this trash into the time and sales to sort of get in the way, and then you'll see dark pooling. You'll see the volume fall off, and then they follow that up with these what's called burst basket trades, which that's just program trades that have multiple stocks all inside a single basket, and they're all executed simultaneously. And the other thing that you want to focus on is the trades done at the bid, or trades done at the ask that are clearly representing short selling. And what they'll do is they'll trade at the ask, and then trade at the bid, and then they'll flip the ask down to the bid, and then stair step it down a penny or two at a time, and you'll see a lot of activity here. That's what I call bid bombing, and then just short selling to sort of ladder attack and move things down. But so this is what I record every day, and this is where the at the opening bell, this is where the NASDAQ 1 share bandits show up and DDoS attack or spam basically the window. You guys can see how close we are. I mean, really, if we can just move above this that 436 level later today, we'll be looking good. Keep an eye on the volume, and unless there's a big global macro disruption, sort of liquidity disruption that causes some short covering in the stock. And there are a decent number of shorts in the stock right now that have recently shorted the stock. You can see this HB designation right here on my trade station next to the ticker symbol. That stands for hard to borrow, meaning that they don't have a big inventory of it. Either they won't loan you the stock, or it's going to cost you a lot, relatively speaking. So anyway, if you see high volume and we start to move above that 436 level, and there's nothing else going on that's disruptive in the overall market that would lead to forced short covering in AMC, then that means that these guys are finally on our side, and they're probably getting ready to make some kind of an announcement that Herein has restructured debt and pushed the debt out, or something else. But I can guarantee you they're not going to pump volume into the lit exchange for us as the stock's moving higher and above our 436 Anemoi daily trigger, unless they want the stock to start to move higher. Otherwise, they'll just continue to dark pool the buying pressure, and they'll see this is actually bullish. See that burst basket activity at the ask? This is potentially bullish here. Depends on how this bar closes, because that can be short selling. Yeah, that could have been short selling. But if they close that bar at the upper end of the range and let you have a green bar close as the volume picks up, that's bullish. If not, that's them selling short at the ask. Yeah, see that aggressive burst basket? All 418 upper end of the range. All right, I'm going to wrap this up. Hope that was useful. I just wanted to do a really deep dive across the board so that everybody knows sort of what I'm thinking at this point. But unless you're interested for technical analysis reasons or whatever, this is all you need to watch is the Nemoy terminal. And unless we can move above, that daily trigger at 436, there's really nothing to see here. I actually think we will break above that over the next 3 days here. So we'll see. That's it from my side. Good luck, everyone.